Hey guys, so in today's video we are going to discuss the provisions of chapter 10, that is Audit and Auditors. So starting with section 139, appointment of a subsequent auditor of a company that is not a government company. Okay, so a company can either appoint an individual or a firm at the first AGM. So such person will hold office from the first AGM till the sixth AGM and thereafter till the conclusion of every sixth AGM. Manner and procedure for the appointment. Company required to form audit committee, then the audit committee will appoint the auditor. If a company is not required to form an audit committee, then the board of directors will appoint the auditor. So what is the procedure? Competent authority, that is either the audit committee or the board, shall take into consideration the qualification and experience and check if it suits the size and requirements of the company. So the audit committee or the board, first thing it will check the qualification of the auditor and that person's experience and also check if it suits the size and requirements of the company. Second, it will have regard to pending proceeding relating to professional matters of conduct against the proposed auditor before ICAI or court or competent authority. So you'll have to check whether there are any legal matters against the auditor based on his professional misconduct. If in the past, if he has been involved in any professional misconduct and if there is any if there is any suit going against him, so you have to check out for that. Then call for more information from the proposed auditor. So you will arrange for a meeting with the auditor and then talk on the other information that you would like to know from him. So the responsibility of the audit committee: recommend name of the proposed auditor to the board for consideration. The board of directors will consider the recommendation of the auditor and recommend the proposed auditor to the members in the annual general meeting. Okay, so next. Audit Committee, Section 177. So which companies are required to constitute an audit committee? So the board of directors of every listed public company and following class of companies shall constitute an audit committee. So every listed public company. So the board of directors of every listed public company and the following class of companies, so we'll check that below, shall constitute an audit committee. Which are the following class of companies? All public companies. So first is every listed public company. Next is all public companies. But all public companies whose paid up capital is 10 crores or more. Then all public companies whose turnover is 100 crores or more. And all public companies whose aggregate outstanding loans, borrowings, debentures, deposits exceeds 50 crores or more. This is inclusive of 10 crores. This is inclusive of 100 crores. But here it exceeds 50 crores or more. Note, the value existing on the date of last audited financial statements shall be taken into consideration. Next, if the board of directors. Now here we saw that the audit committee will recommend the name of the auditor to the board of directors and then the board of directors will consider the name and then further recommend the name of that auditor to the members at the annual general meeting. So now here, if the board agrees with the recommendation of audit committee, it shall further recommend the appointment to members in AGM. That we already know. Next, if the board disagrees, what should the board of directors or the audit committee do? So the board of directors disagrees, it shall refer back to the audit committee for reconsideration, citing reasons for disagreement. So it will also give reasons to the audit committee as to why it is not in acceptance with the auditor that has been recommended by the audit committee. So after sending the reasons for disagreement, the audit committee will consider those reasons given by the board of directors. And now if the audit committee does not choose to reconsider its original recommendation, so it chooses to stick to its original recommendation, then what the board should do? The board shall record reasons for its disagreement. Whose disagreement? The audit committee's disagreement. And then along with recording the reasons for the audit committee's disagreement, it shall also send its own recommendation for consideration in the AGM. Next, before the appointment of auditor, what has the company to do? The company has to obtain a written consent and a certificate from the auditor that if the appointment made will be in consideration or in accordance with the conditions as prescribed. So what are the two things that the company has to obtain from the auditor before the appointment? Is written consent and a certificate. Next, Now, what are the contents of this certificate? Contents of certificate issued by auditor before appointment. Before appointment, this also includes reappointment. So, whether it is for reappointment or appointment, the contents of the certificate are going to remain the same. Now, that is whether the individual of the firm is eligible and not disqualified for appointment under the Act, the CA Act 1949, and rules and regulations made thereunder. Next, whether the appointment is as per the terms provided under the Act. First is you have to check whether the individual or firm is eligible and not disqualified and in accordance with CA Act and Companies Act. Next is whether the appointment as per the terms provided under the Act. Next, appointment is within the limits laid down under the Act. Within the limits laid down under the Act. Next, whether the list of pending proceedings with respect to professional conduct as disclosed in the certificate is true and correct. Next, the auditor satisfies criteria specified in section 141. This we'll go on to see like in the further sections. Communication to auditor for appointment. The company shall inform the auditor of his appointment and also file a notice in form ADT1. You should always remember which forms are meant for to satisfy which purpose. So form ADT1 is communication to auditor about his appointment with the registrar. So file a notice in form ADT1 with the registrar within 15 days of meeting in which the auditor is appointed. Terms of auditor, section 139(2). Listed companies and other class or classes of companies except one-person company, small company shall not appoint or reappoint an individual as auditor for more than one term of 5 consecutive years and an audit firm as auditor for more than 2 terms of 5 consecutive years. So now what is this class or class of companies? So rule 5, class or classes of companies. So they are all unlisted public company having paid up share capital of 10 crores or more, all private limited companies having paid up share capital of 50 crores or more, all companies having public share capital of below the threshold limit but having public borrowings from financial institutions, banks or public deposits of 50 crores or more. Okay, we'll go through it again. So the term of auditor. So how long can the auditor be appointed as auditor of a company? So for every listed company and other class or classes or companies. So appointment of auditor is not required for one-person company, small company. No need to appoint or reappoint. So now an individual as auditor. So if it's an individual, then he can serve for a period of 5 consecutive years. And if it's an audit firm, they can serve for a period of 2 terms. That is total 10 years. So Rule 5, class or classes or companies. So all unlisted public companies having paid up share capital of 10 crores or more, all private limited companies having paid up share capital of 50 crores or more, all companies having public share capital of below the threshold limit. Below the threshold limit is below this limit, 10 crores or 50 crores, but having public borrowings from financial institutions, banks or public deposits of 50 crores or more. Now, what is the schooling period? So, an individual auditor, an audit firm who has been appointed by the company shall not be eligible for reappointment in the same company for 5 years from the completion of such term. So, keep in mind the same company for 5 years from the completion of such term. So, once they have completed their tenure, if it's an individual of 5 consecutive years or if it's an audit firm for 2 terms of 5 consecutive years, that is 10 years, then they'll have to take a break of 5 years if they're going to be reappointed back into the same company. So after 5 years, they can be reappointed. Next. So as on the date of appointment, no audit firm having a common partner or partners to the other audit firm whose tenure has expired in a company immediately preceding the financial year shall be appointed as auditor of the same company for a period of 5 years. So now, say that this person who has been appointed as an auditor for 5 years, say that this audit firm that has completed their period of 10 years is now retired and they're going to appoint a new auditor. But there has been an existing, okay, just delete all this, okay, what explanation I gave, just forget it. Next, okay, so nothing contained in the above points will affect the company of its right to remove an auditor or the right of the auditor to resign from such office of the company. So, appointment of first auditor other than the government company, section 139(6). So, the board of directors within 30 days of date of registration will appoint the first auditor. So, on failure to appoint by the board, the members within 90 days at the extraordinary general meeting will appoint the auditor, and such auditor should hold office till the conclusion of the first AGM. Next, filling up of casual vacancy, section 139(8). Casual vacancy will be filled by the board of directors within 30 days. But if the vacancy is caused by resignation, then the appointment by the board shall also be approved by the company at the general meeting, which will be conducted within 3 months of recommendation of the board. So, the auditor appointed shall hold office till the conclusion of the next annual general meeting. Next, the appointment of auditor in a government company, that is subsequent auditor. So, the Comptroller and Auditor General within 180 days from the commencement of the financial year, he shall appoint the auditor, and such auditor shall hold office till the conclusion of the annual general meeting. Appointment of first auditor in a government company. So, the first auditor appointed by CNAG within 60 days from the date of registration. So, if the CNAG fails, then by the board within the next 30 days. If the board also fails, then by the members of the company within 60 days at an extraordinary general meeting, and such auditor shall hold office till the conclusion of the first annual general meeting. Casual vacancy in a government company, section 139(8), it shall be filled by the Comptroller and Auditor General within 30 days, on failure by CNAG by the board within the next 30 days. Now, the reappointment of retiring auditor, section 139, 9, 10, 11. So, retiring auditor may be reappointed if he is not disqualified, if he has not given a notice of his unwillingness to be reappointed, and special resolution also has not been passed at the company appointing a new auditor, or expressly saying that the auditor that is there at present will not be reappointed, where at any annual general meeting the auditor is not appointed or reappointed, so the existing auditor who is currently there in the business shall continue to be the auditor. Steps for removal of auditor, section 140. So, first a special notice will be sent for removal of the auditor, and then a board meeting will be held. So, in the board meeting, they will decide about the removal and will also authorize the filing of application to the central government. So, once the application has been sent to the central government, the application should be sent in form ADT2 within 30 days of board meeting along with the prescribed fees. So, after you get the approval of the central government, again another special notice will be sent for conducting of the annual general meeting. So, at the annual general meeting, the auditor will be given reasonable opportunity of being heard. If at the annual general meeting the members are not satisfied with the reasons given by the auditor will be removed through a special resolution. Next, resignation by the auditor, section 142 and 3. If the resignation is in a non-government company, it shall be made in form ADT3. The auditor shall indicate his reasons for resignation within 30 days and shall also file it with the company and register within 30 days of his resignation. If the resignation of auditor is in a government company, the application should be made in form ADT3 indicating his reasons for resignation and it should be filed with the company register and CNAG within 30 days of his resignation. Next, if the auditor fails to do so, penalty will be charged on him of 50,000 rupees or an amount equal to the remuneration of auditor, whichever is less. If he continues if on continuing failure, rupees 500 each day up to a maximum of 2 lakhs. Now, auditor acts in a fraudulent manner or abetted or colluded in any fraud, section 140, subsection 5. So, now the tribunal comes into act. The tribunal, either by itself, that is suo motu, or on an application that has been received by the central government, or on an application made by any person concerned, maybe in the business. So, if the tribunal is satisfied that the auditor has directly or indirectly acted in any fraudulent manner, he'll direct the company to change the auditor. The removed auditor shall not be eligible to be appointed as auditor for any other company for a period of 5 years and is liable under section 447. if an application has been received by the central government by the tribunal, if the tribunal is satisfied within 15 days of receipt of application, it shall order that he shall not function as auditor and the central government may appoint another auditor. Section 141 Qualification of Auditor. A person shall be eligible to be appointed as an auditor of the company only if he is a chartered accountant within the meaning of Chartered Accountants Act 1949. A firm where majority of partners practicing in India are qualified for appointment as above may be appointed by its firm name to be the auditor of the company. Where a firm including a limited liability partnership is appointed as auditor of the company, only partners who are chartered accountants shall be authorized to act and sign on behalf of the firm. Disqualification of auditor, section 141, subsection 3. Clause A. A body corporate other than a limited liability partnership. So, a body corporate cannot appoint an auditor except a limited liability partnership firm. An officer or employee of the company. So, the auditor should not be an officer or an employee of the company. A person who is a partner or who is in the employment of an officer or employee of the company will also not be appointed as auditor. A person, a relative, or a partner holding any security of or interest in the company or its subsidiary or of its holding or associate company or a subsidiary of such holding company, provided the relative may hold security or interest in the company of face value not exceeding 1 lakh. If it exceeds the limit, the auditor should take corrective action within 60 days. Okay, point to be kept in mind is face value and not market value. He is indebted to the company or not indebted. So a person, a relative or a partner indebted to the company or its subsidiary or its holding or associate company or a subsidiary of such holding company in excess of 5 lakhs. So indebted of 5 lakhs. This is holding security or interest of 1 lakh. Next, a person or a firm who directly or indirectly has a business, and a guarantee in excess of 1 lakh. So, guarantee of 1 lakh. Next, a person or a firm who directly or indirectly has a business relationship with company except services rendered by auditor nature or professional services. Commercial transactions which are in the ordinary course of business transacted at arm's length. Next, a person whose relative is a director or is in employment of the company as a director or key managerial personnel. A person who is in full-time employment elsewhere or a person or a partner of the firm holding appointment as its auditor if such person or partner is at the date of such appointment or reappointment holding appointment as auditor of more than 20 companies other than one-person company, dormant company, small company, private company, having paid up share capital less than 100 crores. A person who has been convicted by a court of an offence involving fraud and a period of 10 years has not lapsed from the date of such conviction. A person who directly or indirectly renders any service referred to in section 141, section 144 to the company or its holding or subsidiary. So we'll see this section later on. So section 141(4). If a person appointed as an auditor of the company incurs any of the disqualifications specified in section 141(3), he shall be deemed to have vacated his office. Such vacation shall be deemed to be a casual vacancy in the office of the auditor. Section 142 Remuneration of Auditor. It shall be fixed by the company in general meeting or in such manner as the company in general meeting may determine. The first auditor will be appointed by the remuneration will be fixed by the board. In addition to fee payable, also include the expenses incurred by the auditor in connection with the audit of the company and any facility that has been extended to him. The remuneration does not include services provided by him at the request of the company. So now section 144. Auditor shall provide to the company only such services as approved by the board of directors or the audit committee, but does not include the following: accounting and bookkeeping services, internal audit services, design and implementation of any financial information system, actuarial services, investment advisory services, investment banking services, rendering of outsourced financial systems, management services, or any other kind of services as prescribed. So far, nothing has been prescribed. Rendering of services directly or indirectly by the auditor or the firm. Okay, so what is the mean? Rendering of services directly or indirectly. So directly either by the auditor himself or by the firm, and indirectly if it's the auditor's relatives or persons connected or associated with the auditor, the entity in which the individual has significant influence or control, entity whose name, trademark or brand is used by such person. If it's a firm, then indirectly by the partners, by the parent, subsidiary, associate, entity in which firm has significant influence or control, entity whose name, trademark, brand is used by such firm. Section 145. Auditor to sign the audit report. Auditor shall sign the audit report, certify any other document of the company in accordance with Section 141, subsection 2. Qualification, observation, and comments on financial transactions or matters which have adverse effect on the functioning of the company mentioned in the auditor's report shall be read before the company in the general meeting and shall be open to inspection by any member of the company. Section 146. Auditor to attend the general meeting. All notices, communication relating to general meeting to be forwarded to the auditor. Auditor shall, unless otherwise exempted by the company, attend either by himself or through his authorized representative, who shall also be qualified to be an auditor. The auditor shall have right to be heard at such meeting on any part of the business which concerns him as auditor. Section 147. Punishment. Penalty on the company. If the company contravenes any of the sections from 139 to 146, they will be charged with a penalty not less than 25,000, which may extend up to 5 lakhs. Penalty on officers. If any of the officers of the company contravene section 139 to 146, the officers in default will be charged with a fine not less than 10,000, which may extend up to 1 lakh. Penalty on the auditor contravenes sections 139, 144, and 145. Fine will be charged not less than 25,000, which may extend up to 5 lakhs, or 4 times the remuneration of the auditor, whichever is less. If the auditor has contravened the sections knowingly or willfully with intention to deceive, imprisonment up to 1 year. Fine not less than 50,000 or 8 times the remuneration, whichever is less. The auditor will refund the remuneration received to the company and also pay for the damages. Liability of audit firm. In case of criminal liability, only concerned partner shall be liable. Section 143. Powers of auditors. Access to books of accounts. The auditor at all times will have access to the books of accounts and vouchers of the company, whether kept at registered office or any other place. He shall also be entitled to have necessary information and explanation required from the officers of the company, such information and explanation as the auditor may contain necessary for the performance of his duties. He shall also have access to records of all its subsidiaries, right of access to record of all subsidiaries, associations, and holding company. What are the duties of auditor? Matters of inquiry. Whether loans and advances made by the company on the basis of security have been properly secured and all the terms on which they have been made are prejudicial to the interest of the company or its members. Whether transactions of the company, merely represented by book entries, are prejudicial to the interest of the company. Whether the company, not being an investment or banking company, whether so much of the assets of the company as consist of shares, debentures, and other securities have been sold at a price less than that at which they have been purchased by the company, whether loans and advances made by the company are shown as deposits, whether personal expenses are charged to revenue account, whether it is stated in the books and documents of the company that any shares have been allotted for cash, and whether cash has actually been received in respect of such allotment, and if no cash has actually been so received, whether provision as stated in the account books and balance sheet is correct, regular, and not misleading. Auditor to make a report on the following to the members: whether the accounts examined by him on every financial statement required by the Act to be laid before the company in the general meeting. The contents of the auditor's report, whether he has sought and obtained all information and explanation which, to the best of his knowledge and belief, were necessary for the purpose of his audit, and if not, the details thereof and the effect of such information on the financial statements. Whether, in his opinion, proper books of accounts required by law have been kept by the company. Examination of those books and proper returns adequate for the purpose of his audit have been received from branches not visited by him. The report on the accounts of branch office of the company audited by a person other than the company's auditor have been sent to him. The company's balance sheet and profit and loss account in the report are in agreement with the books of accounts and returns. whether the financial statements comply with the accounting standards. Observations and comments of auditors on the financial statements or financial transactions. Observations and comments of auditors on the financial statement or financial transactions have any adverse effect on the functioning of the company, and if any director is disqualified from being appointed under section 164(2), then he should also record qualification, reservation, or any adverse remark relating to the maintenance of accounts and other related matters. Next, whether the company has adequate internal controls with reference to financial statements and operating effectiveness of such controls. Next, the exemption to private company. Section 143 shall not apply to private company, which is a one-person company or small company. Turnover is less than 50 crores as per the latest financial statements, and aggregate borrowings at any point of time is less than 25 crores. Private company should not be committed to a default to avail this exemption. Next, such other matters as may be prescribed. So now Rule 11 provides auditors' report shall also include views and comments on the following: whether the company has disclosed impact of pending litigations on its financial position and statement, whether the company has made provisions as required by law, accounting standards for material foreseeable losses on long-term contracts including derivative contracts, whether any delay in transfer of funds to Investor Education and Protection Fund by the company, whether the management has represented that to the best of its knowledge and belief, other than disclosed in the notes to the accounts, no funds have been advanced, loaned, or invested, either from borrowed funds, security premium, and other sources, by the company to a person or entity, including foreign entities, with the understanding, whether recorded in writing or otherwise, that the intermediary shall directly or indirectly lend or invest in other person or entities on behalf of the company, that is the ultimate beneficiary. No funds have been received by the company on behalf of the funding party. Based on such audit procedures that the auditor has considered reasonable and appropriate in circumstances, nothing has come to their notice that has caused them to believe that the representation under subclause 1 and 2 contain any material misstatement. Whether dividend declared or paid during the year by company is in accordance with section 123. Whether company has used accounting software for maintaining books of accounts with a feature of recording audit trail, that is the edit log, and the same has been operated throughout the year and the audit trail has not been tampered with and preserved by the company as per statutory requirements. Where any of the matter is answered in negative or qualified, the auditor's report shall state reasons for the same. Compliance with auditing standards. Every company shall comply with auditing standards. The central government may prescribe auditing standards and any addendum as recommended by ICAI in consultation with the National Financial Reporting Authority. Until any auditing standards are notified, the ones specified by Institute of Chartered Accountants of India shall be deemed to be the accounting standards. Reporting of fraud by auditor. If an auditor of the company, in the course of the performance of his duties as auditor, has reason to believe that an offence of fraud which involves or is expected to involve an amount of rupees 1 crore or above is being or has been committed by officers or employees, the auditor shall report the matters to central government in the following manner. Report the matter to the board or audit committee immediately, but not later than 2 days of the knowledge of fraud, seeking their reply within 45 days. On receipt of reply, auditor shall forward the receipt of reply from the board or audit committee, along with his comments on the above reply to the central government within 15 days. If auditor fails to get a reply from the audit committee within 45 days, he shall forward his report to central government along with a note containing details of his report that was earlier sent to the board or audit committee for which reply had not been received. Report shall be sent to the Secretary, the Ministry of Corporate Affairs, in a sealed cover by registered post with acknowledgement due or by speed post followed by an email in confirmation of the same. Postal address, email address, contact number, mobile number, signed by auditor with his seal, and membership number to be mentioned on the letterhead of the report. Report shall be in Form ADT 4. In case of fraud involving lesser amount, auditor shall report matter to Board of Directors or the Audit Committee within 2 days of his knowledge. Nature of fraud with description, approximate amount involved, and the parties involved. Following details to be disclosed in the board's report: the nature of fraud with description, approximate amount involved in the fraud, parties involved if remedial action is not taken, and the remedial action taken. Provisions also are applicable to cost auditor and these provisions are also applicable to the cost auditor and secretarial auditor. Penalty for non-compliance by any auditor, cost auditor or the CS in practice. If it's a listed company, 5 lakh. If it's another company, then 1 lakh. Audit of government company, section 143. Government company shall appoint auditor under section 139(5) or 139(7) and direct the auditor in the manner in which accounts of government company are required to be audited and submit a copy of the report to the central government. Audit report has to include the following: the directions issued by Comptroller and Auditor General, actions taken thereon, the impact on accounts and financial statements. The Comptroller and Auditor General, within 60 days from the date of receipt of audit report, has the right to conduct a supplementary audit of financial statements by such person as he may authorize, to require such information and additional information to be furnished to such person authorized in such form as the CNAG may direct. Any comments given by CAG upon or supplement to the audit report shall be sent by the company to every person entitled to the copies of audited financial statements and shall also be placed before the annual general meeting at the same time and manner as the audit report. Test audit for government company, if CNAG may consider necessary by an order, cause test audit to be conducted without prejudice to provisions related to audit and auditors. Audit of accounts of branch office under section 143(8). Branch office in India. Account shall be audited either by the company's auditor appointed under section 139 or by any other person qualified for appointment as an auditor of the company under section 139. Branch office is placed outside India, then either it will be audited by the company auditor or by an accountant or a person duly qualified to act as an auditor with the laws of that country. That's it.